Hi guys, Girolamo Aloe here, and today I want to answer to a question of a student of ProfitB. This student is new and he asked me how to draw on the chart climatic actions and their reaction. So, a climatic action in the chart is simply something that stops a price behavior. So, if the price behavior is moving in a direction for the middle term, for the long term, also for the short term, the price is making a change. This changing occurred by a climatic action, or better, this changing marks a climatic action. Indeed, the climatic actions are just changing in the market that occurred because there is something in the strength that is moving the price that is changing. So, when I get a climatic action that is just stopping the behavior, just stop the price behavior, I get also a market reaction. The market reaction can be relatively strong. I can get in practice that having a reaction, a climatic action, I get also an automatic reaction or an automatic rally that occur in the market because there is a strong effect in the market that is stopping the price behavior. This is not something that occurs immediately. A climatic action is not something that you can expect in the market without having nothing in advance. I mean, everything that occurs in the market is always absolutely and definitely visible in the market days, weeks before then this is going to happen. Always, always. So, if you see a market climatic action, you already know in advance that this is coming because you see that the strength that is moving the trend in a direction is going to get stopped, or better, this shows a situation where a strength in opposition is going to stop this. It's going to give a concrete opposition to the market behavior, to the trend that we have in the market. So this is visible in advance before to get the climatic action. The climatic action is just the last step of all this process. So a trend continue, the price continue its progression, but at a certain point you get a first stop, a second stop, another stop, a decreasing of the spread, and so on. And at the end you get a climatic action. And from that climatic action you find a market action that moves the price in the opposite direction, and this moving just is fast and sharp, and in this way you can identify really clear where are the climatic action, and then you can mark your resistance or your support on this point. These are things concrete important. The strength that is moving the price in a direction, so what is keeping up the price progression, is measurable. You can estimate it just because a market progression is caused by something that occurred in advance. So in advance you have something that is developing this cause, and the developing of this cause develop a strength for this market behavior. The price behavior at a certain point is accumulating or distributing securities, and then this is increasing the strength of accumulation, the strength of distribution. So the price ladder has enough securities, is strong enough to keep up, to move up in a markup and keeping this up, or move down in a markdown and keep this running, of course. And this strength is what defines also the extension of this markup. So I can make an estimation for the strength of the distribution, for the strength of the accumulation. In the same way, I can make an estimation of the markup extension or the markdown extension. So I know in advance where the markup can get a stop, and I know in advance where the markdown can get a stop. In the same way, I already know where I can find my target for my buy trade or my sell trade. And when I see this markup, this strength is keeping up this price behavior. In the same way for the markdown. But at a certain point, the strength in opposition increase, and the price progression find a difficulty to proceed. So it can get an hesitation, but this hesitation is not just the price that is not going over a resistance or a support. This is just a price that get some stops in the market that mark just particular pivots that comes one by one after the previous one, and the spread can decrease too in some circumstance, and at the end you get the climatic action. So you can get a buying climax, and you can get a selling climax. And this is how you can recognize the climatic action in the market. The climatic action are concretely something that shows a changing in the market behavior, and they are really important. They are crucial. They begin something that is different to what was happening before. So this defines a changing in the market. You can get a changing in the price behavior that can be a bullish trend, a changing in the price behavior that can be a bearish trend, and a changing in the price behavior that can be a consolidation, just a congestion area, and so on. So guys, this is how the market behavior change. If you have questions, please contact me. I will try to give you much more explanation. I will try to clarify these things better. Thank you guys to listen to my words. Thank you to be here, and see you next time. Bye bye.